Novo Nordisk stock is in a free fall. It's down a staggering 62% in the last year. And after announcing a new CEO and a shocking 2025 outlook cut, it plummeted another 32% just last week. The market is panicking. Everyone is selling. But is this the exact moment that smart investors have been waiting for? Welcome back to the channel. Our mission here is to cut through the noise, ignore the fear and find the absolute best investment opportunities in the market to make money. Today we are putting Novo Nordisk under the microscope. We are going to dive deep into its business, its fundamentals and run a valuation to answer the ultimate question. Is Novo stock a generational buying opportunity or a dangerous falling knife? Let's find out. So, what makes Novo Nordisk such a powerhouse? For decades, they have been the undisputed leader in diabetes care, dominating the global insulin market. But the real game changer has been their expansion into the massive and rapidly growing weight loss market with blockbuster drugs like Ozempic and Wegovy. Their competitive advantage or moat is immense. We are talking about a fortress of patents protecting their discoveries, decades of brand trust built with doctors and patients, and a global manufacturing and distribution scale that is incredibly expensive and difficult for any competitor to replicate. Now, they aren't alone. Their primary rival is Eli Lilly, which has its own very successful drugs, creating a fierce duopoly in this space. So, if the business is so great, why collapse? The market hated to recent announcements. A surprise change in CEO, which always creates uncertainty, and more importantly, a reduction in their 2025 growth outlook. Wall Street heard slower growth and hit the sell button, punishing the stock with no mercy. Plus, companies like Hims and Hers continue selling cheaper versions of Wegovy, calling them compounded versions, trying to avoid Novo Nordisk's patent protections. There are legal actions ongoing, but for now it's hurting Novo Nordisk's growth. Even though Novo Nordisk is facing some problems in the short term, their fundamental remains incredibly good. When you look to the graph, it's huge. Around 1 year ago, they were trading at almost $150 per share. Right now, it's trading under 50. 66% drawdown, which is very, very high. When you look to their fundamentals, for example, revenue, it's growing steadily year over year. Profits, net income and free cash flow growing as well. When you look to margins, for example, their gross margins are growing, net income as well. When you look to net income per share and free cash flow per share, they've been growing incredible fast, even though free cash flow per share in 2024 decreased because of heavy capex investment. They have to invest a lot in their manufacturability in factories because they are having high demand for their drugs, so that's a good investment, and especially when you have return on invested capital very high. Even though seeing return on invested going down, it's not a good sign. I don't mind having all the companies I own having return on invested capital declining to 53%, which is huge. Shares outstanding going down, which is very good. When you try to evaluate, let's check our money journey checklist. First, it's all check marks. They've been growing revenues around 17.5% compound annual growth rate. They have the potential to continue growing. They are expecting to grow EPS, earnings per share, at around 15%, even though they announce a lower growth for this year, 2025. But they are inside the diabetes and weight loss market. There are more patients requiring drugs for diabetes. Obesity is a problem that is growing in our society, so the demand for their drugs even though it could be diabetes or weight loss, is increasing in demand for the next few years. So it is a very good industry growth prospect. So that's a check mark. In terms of their revenues, they are cyclical. They did demand, but the demand for their drugs has been very steadily increased. So I would say it's recurring. It's high qualities of their revenues. Look at this graph, revenues growing each and every year, so that's very good. Their product and process development has been very good. Management continue to invest in research and development as well. They have been creating new patents, having new blockbuster drugs in the market. That's why they have been outperforming the market in the last few years. In terms of margins, exceptional margin, gross margins of around 84% in average, profit margin, net profit margin around 34%. They have an incredible product that and they could sell at a very high margin, so that's very good. They have been maintaining, actually they have been growing their profit margin, which is always something I want to see. When you compare them to competition, for example, they have better margin to when in comparison to other pharmaceutical companies. Eli Lilly has some good margins as well, but Novo Nordisk has been more profitable and has better margins when you compare to industry average. They have pricing power. I don't know about the future, but in the past they've been these margins tell a lot because they have a very good. They are protecting by patent, and they've been having their pricing powers to these new blockbuster drugs. But in the future, we don't know. They are facing some headwinds, but for now, they have been showing a lot of pricing power. You just have to look at their net income margins and profits growing steadily. In terms of debt, they have some debt, but it's very low. They could pay their debt in just 1 year of free cash flow. Which is very good, especially in the pharmaceutical companies. We see a lot of that in this industry, and they are better than the other companies in terms of that. Rates of return, in average, have been their return on invested capital has been around 61%. Has been decreasing, which we don't like to see, but even though above 50% return on invested capital, it's very good. In terms of management, I believe they are very competent. If there was not very competent, Novo Nordisk would not have been growing so fast in the last few years. So even though they changed their CEO and they are facing some headwinds in the short terms, probably caused by management, we don't know. But overall, it's a very competent management team. Their culture, reputation, level relation are very good. So that's the way I evaluate them. But I do believe in terms of management and reputation, this is a very good company. The Nordic countries in Europe are very professional, and I do believe they are very professional overall in their company. In terms of moat and competitive advantage, they have a wide moat. They have their patents, their know-how, their R&D, their manufacturability capacity, which is very good. They have their reputation on drugs and pharmaceuticals and doctors, which is very, very good and very valuable. In terms of free cash flow per share growth, they've been growing free cash flow per share around 22% each year, which is very, very good. And they've been returning capital to the shareholder. It's all check marks. So they have been doing some buybacks, and they are paying a dividend right now of around 3%, which is, I believe they have never had a dividend yield so high, 3.44%, because now valuation is really low compared to historical average. But there are other questions. I like to always have this question. Is it cheap? Yes, it definitely looks cheap, but we'll do our discounted cash flow analysis. Is it a good business? It's an incredible business. Who's running it is Mike Doutside, the new CEO. It will be starting 7th of August after the next earnings report. What can I miss with the Novo Nordisk? What could be the headwinds, the problems for my thesis?
competition. Eli Lilly losing market share. Now they are the leader. GLP-1 pricing power slowing. They have huge margins. They can face competition, even though they have patents expiring only on 2031. There could be competition from other drugs, and it's always bad for business. They could lose market share. Not creating new innovations and patents could be a risk for the next 5 years. If they don't innovate, don't create new drugs, new blockbusters that they could help their growth, that could be a problem, especially for a company that usually has high valuation, and patents ending 2021. In terms of 3 sources of returns, that's something I always want in a company that I invest. They need revenue and earnings growth. It's a check mark. Novo Nordisk will continue to grow very fast, and I hope earnings per share as well. They could have a P expansion. Right now they are trading at a forward P of 11 for the growth this company has, the quality they have, their know-how. They deserve at least a 20p, so we could have a double from here just in PE expansion. And they are doing buybacks and dividends. Right now they are paying a huge dividend. It looks like huge, 3.44%. That's big because the stock price is going down a lot. And if I was the management team, I would use the cash they have in hand to buy back some shares, because this valuation, it's very compelling. Right now, buybacks would create more shareholder value than the dividend they are paying. So if they start doing a lot of buybacks in the next quarters, that will be proof that management is very good. That's at least what I'm expecting as a Novo shareholders. Then, is this really cheap? In terms of fundamental, it looks incredibly good. So for me, it's a Danish company. In terms of risk, I thought that was a low risk business risk, but right now they are facing some headwinds. So I would say that it's a medium risk, and for a company with this, I would expect a discount rate of, for my base case, 12.25%. I don't want to invest in this company, or at least for my fair price. We have to compound at least above 12%. So my assumption for my base case will be, I'm expecting them to have margin around 32%, which is lower than what they are having now. Right now, last year it was at almost 35% margins, net income margins. So I'm expecting less. So I'm expecting a reduction on their net income margins. In terms of growth, they are expected to grow around 12% in the next 2 years. For the other 5, I'm expecting them to grow around 7% only, which is very good growth, but analysts are expecting more. In terms of future P, I'm expecting a 20 future P, and with a discount rate of 12.3%, I came with an intrinsic value around 88.5, but when I add my bull case and bear case, adding some the balance sheet, I came with an intrinsic value of 89.6, around $90. That's my fair value. There are already some margin of safety in there, but the stock right now is trading at a 48%. It's a 46% discount to my fair value. That has already some margin of safety. That is a lot of discount in Novo Nordisk, especially because they are very, very cool. It's all check marks, high quality scores, one of the best companies in terms of quality that I have in my watch list. So this looks incredible cheap. I'm used to find companies with this discount, 40% discount to my fair value, but not companies like Novo Nordisk. Even
so, to wrap it all up, Novo Nordisk is a world-class, exceptionally well-managed company with a dominant position in a market set to grow for years. It's a shareholder-friendly business with an incredible track record. The recent panic has pushed its stock down to a valuation we have never seen before in its history. Yes, the lowered guidance is a concern, but the market's reaction seems extreme. In my opinion, this looks less like a falling knife and more like a golden opportunity to buy a high quality compound at a bargain price. But that's my analysis. I want to hear from you. Do you think Novo Nordisk is an incredible buy right now, or is the risk too high? Are you buying, selling, or watching from the sidelines? Let me know down in the comments. If you got value from this video, please do me a huge favor and hit that like button. And if you want to find more opportunities like this one, make sure you subscribe to the channel so you don't miss a thing. Thanks for watching, and I'll see you in the next video. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advice before making any investment decision.